Hello, and welcome to Trader's Insight. I'm Samuel,
And I'm Matt.
and we'd like to welcome you to this weekend edition where we're going to be going over our best trades from the week and what we're looking for the future. So let's start out with the S&Ps.
Yeah, let's start with the S&Ps, and as you can see on the screen here, it ended Friday on key support on this short-term trend line. And what we're looking for, I think what was crucial there was that the trend line held and it didn't break. So, over the next few days or over this next week, we're expecting some sort of bounce back before any possibility of retesting that trend line. Whether that'll happen or not, Sam, I'm not quite sure. But I think one thing is for sure is that if that trend line breaks, I think it's going to open up the scope for more downside movement.
Well, I mean, we've seen it tested a few times so far. Last time was back in early part of May.
Yeah.
And, we came down, we saw like 3-4 days of downward movement, and then it came back up, and we hit new highs at 2134. So it could just be that, market slowly moving back up. We've had that time period from mid-May till just about the beginning of June was, everybody was like, the market can't go any higher, can't go any higher, can't go any higher. We may not be getting towards a sell-off, but we definitely needed prices to come down so we could reach new highs again.
Yeah, absolutely. And we're probably looking at around a 15-point upside movement, at least back into the 21 and 80 EMA before it decides which way to go. Now, the way I trade is closed under the 21 moving average twice now, which means most players should be taken as bearish. However, I'm going to sit this one out for the first part of next week just to watch how the price action acts in the S&P around that trend line support. And see if it can have some sort of bounce back upwards.
Yeah. Also, let's take a look at the euro because that was the other big mover of the day.
Yeah.
So let's go down to a 4-hour chart or 2-hour chart.
Yeah, let's do a 4-hour.
Okay. So we had a big movement from Tuesday. Tuesday of last week, which was here, up into Friday. And then come back down on Tuesday.
Yeah.
So
I think actually let's put it back on the daily just so we can put the move into perspective. Because, yes, there was a big move on Friday. However, look where it finished the week. It finished the week above the 21 period exponential moving average on the daily and above the 8 period moving average as well. Which means all it did was from this big move over here, all it's done is retrace back to its mean again. So yes, made a big a big sell-off after the jobs announcement, but in the grand scheme of things, it's just moved back down to its mean again.
Do you think that this move that we've had in the euro from when did it bottom out? Back in March. Do you think the move that we've had back since here has been people covering the shorts?
Yeah, absolutely. Absolutely. I think it's definitely covering shorts, and I think it was also part of a boat 2-4 type scenario where too many people were short the euro, and generally markets tend to reverse when you're in that type of scenario. I think moving forward, I think we could potentially see some more upside in the euro. Not quite sure how much. Maybe back up to test its highs of 116. But with Europe how it is at the moment, I can't imagine seeing much of a rally in the euro. Unless Greece come out and agree some terms with the IMF for the paybacks, and failing that, if they can't pay it back, then we're looking to test the lows of 104 again.
Yeah, well, I mean we're back in a downwards trend again. So we'll see if we can if this actually moves back up and we can test it and get back into an upward trend. As for right now, we're trending lower. On the long term still.
We're trending now, absolutely. However, I would still be a bit sceptical in initiating any short positions at the moment, simply because of where it is sitting at the moment. It is sitting on support of the 21 period moving average and the 8 period moving average. If we can see some sort of bullish price action on Monday or Tuesday, I'd be willing to buy that for a short scalp up to 114. Failing that, if it breaks, I'll be willing to short it for a short scalp down to around 108.50.
Yeah. Right. Okay. So we're looking about 200 pips either way.
Yeah.
Yeah. Cool. So you caught what? 100 pips. Let's go back down to the 4-hour chart.
Yeah.
So what is it? Last week, I remember.
Yeah, so I caught the big upwards move for the first leg. That's where it is.
Tuesday of last week. Yeah.
Yeah. So I got in there and I got out on the third, and that's it. It's exactly where I got out there.
Mm-hmm.
And obviously I missed the next 2 stages higher. But to me, it was a good enough trade for me. And what I actually did then is, if you go up to the top up here, I actually shorted it up here, and I caught it all the way back down to around 111.70.
What was your basis for shorting it?
It had gone too high too quick. The counter channels that I have on my chart just for the currencies, 3 standard deviations. Sometimes I stick the RSI up there just to see if I can find any convergence when I'm trading currencies, to give me some sort of idea of which way to make a play. So the 1 hour, the 4 hour, the 2 hour, the 90 minutes, the 2 hour, the 6 hours, the 8 hours were all at its 3 standard deviation counter channels, and all of the relative strength index were oversold. So that gave me an indication of to short it. I just had to choose when to short it, and that came into price action. So I watched the price action for an hour or two, decided to take my short position, then managed to take out 70 to 80 pips out of it.
Right, and you got out right around the 111, didn't you?
Absolutely, yeah. And I actually got out.
Right here.
That's where I got out.
Yeah, 112.
And when I got out, I actually initiated a long position.
Yeah, I remember that.
Because it was a very defined risk trade. I got out.
Let's go down to a 1 hour chart. Yeah, so you wrote it all the way down from here to, it was right around here.
Yeah.
Yeah, so we were looking at...
Yeah, so that's where I went long there, and actually put my stop at about 1, just under this previous low down here, just to see what I could get. Obviously the jobs came out far better than everybody expected, and the euro got slammed. So not too fussed, because I had a stop there. I risked a very small amount. So yeah,
but it was a big drop. I mean, we look at the charts on like all of that movement came in the period of less than 5 minutes.
Yeah, I mean that's what happens when a news announcement comes out like that, and it's relatively unexpected. There's always a big move like that, and a lot of times you're very lucky to catch the move.
Yeah. So let's talk about some of the trades of the week. I know the biggest one that we wanted to start with is going to be JD, right?
Let's sit that onto a daily.
A daily, right? So this is our trade of the week that we've been looking at, and I know we talked about this on Wednesday or Thursday last week.
That we're going to buy it.
Yeah, it was down here when it was about 33, right? And then coming into was it Friday?
Friday,
yeah. We had that huge. Let's see.
It was actually intraday. It was 6.5% up.
6.5%.
And that's when I actually took my last. I actually gone out on pretty much the highs of the day there. So I think that was an excellent play. I'm not sure when news came out or whatever. I don't really care, but it worked. Just nice.
Yeah, it made a big move. So, what kind of play did you have going there?
So I sold a lot of puts, and I also initiated quite a few debit spreads. So I bought the in the money at 33 and sold the 36. And I actually bought a few calls as well. And selling those puts was simply to finance buying the calls.
So do you think this move is over, or are you just going to be watching it for a pullback?
I'm going to be watching for any pullback. I'll be buying any pullback into the 21 period moving average or the 8 period moving average. I would consider as a buy. I'd be looking to either sell puts if I can get a good enough risk to reward at the money, risking a 3 to make 1, or I'd be buying debit spreads, 1 in the one in the money, 1 out the money, 1 in the money, 2 out the money, for example.
Yeah, so we'd be looking if it came down to about 34 or somewhere around in the 34 range, either 34.5 or even 34 down the bottom.
Yeah,
I would be looking to buy.
Absolutely, yeah.
So,
and I think that has another probably 3 or 4% move upwards. I see it up to 38, 39, and that was my initial price target. So I'm definitely still looking for that to come to fruition. It's just you don't want to buy a market at the top.
No.
You just want it to come back down a bit before you get into it again. Reload.
Yeah, exactly. Let's go on to the next one. The other big trade of the week was EMC, which we discussed on Thursday.
Yeah.
So we got in here about 24.6, right? And then we had a huge move over the last 2-3 days. So let's go down and check out the dailies. So we had a what's that? So probably 1% move here, another 1% move here, and then another 1% move here. So over the total, we had about let's get out the drawings and find out the trend line. So we talked about this last week on the 1st or the 2nd, somewhere around here, right? So we've seen a 3% gain over the past 3-4 days.
Which is nice, a very nice move. I definitely see more upside potential here.
Definitely.
If you go back to our previous videos, we gave the targets of around 28, and then 29, and then 30, and I definitely still stick to that.
Yeah, it'd be good to see it come up and test its previous highs here at 29.
Absolutely.
Yeah.
It looks really nice.
Yeah, so we're looking for some big movement here coming in the next week. We're starting to see the trend and the momentum really start to gain with the stock. So
absolutely, it's a huge reversal pattern, and I think buyers will get under this over the next few days as well.
Cool. So let's keep on going. We'll take a look at HPQ. Right, so HPQ is another one that we've been looking at this week. We are looking at it because just doing a simple trend line pattern, we can see that it broke the trend line on Friday. It came through that 33.5 mark, and it closed down at 32, which is a percent downwards.
Yeah, it's very nice. I mean, I shorted that. I bought debit spreads on that, put debit spreads as soon as it closed below that trend line on the day before. So I caught a very nice move. I caught that whole move yesterday. I think it's going to carry on going down to 32 and then eventually 31. And it's actually a similar play to Coca-Cola. I actually missed the Coca-Cola play that we'll get onto in a minute. And the HPQ was actually setting up exactly the same as that. So I took, I took full advantage of this move.
Yeah, let's take a look at Coca-Cola as well too, because it's pretty much the same trade as well too that we've been looking at. If we draw a simple trend line from here to here, we can see that it dropped off a few days ago. Yeah, and it's looking for a big short. It could. This dividend's coming up, isn't it? Right. So, when we're looking at Coca-Cola, I mean, we missed the trade pretty much already. We'd be looking for a pullback to get into it, maybe up to 40.5.
Yeah, I'd like it to go up to 40.91, 40.75. Previously, on the day before the big move on the Friday, I was looking for some sort of retracement back to the 21 EMA, or at least to retest that trend line. But it ran away from me. So
yeah,
I wasn't going to chase it. I'm just going to wait patiently for a move back up.
Definitely did. Let's take a look at HPQ, which was another one of our trades that we had this. Oh, sorry, we just looked at HPQ, didn't we?
Yeah, let's look at Amazon. See how we're progressing with that.
I think Amazon actually closed down for the day.
Yeah, I mean that pattern still looks fine to me. Provided it doesn't close below the 21 period exponential moving average 2 days in a row. I'm still holding my bullish debit spreads, core debit spreads, and that.
So now would actually be a good time to, as long as it doesn't close 2 days in a row, we could be looking to get down and open a few more debit spreads down here.
Absolutely. Yeah, I think it's an ideal position at the moment where Amazon is to start scaling into this position for a potential retest back up to its highs.
Yeah. Let's take a look at Staples. Staples is pretty much doing the same thing as we talked about last week. Still just flatlining, going sideways.
Yeah. I mean, we still hold our bullish position in Staples. It hasn't really done much over the past few days. I think it is going to be probably a multi-week hold. Hopefully going up to 18.5 and see how it acts around then.
Yeah, of course. Let's take a look at what we're looking at going forward. I know the big one that we were looking at was Exelon.
Yeah.
Again, this is for a short, right?
This was for a short, and as you can see, it's the exact same setup, or what is setting up as HPQ and Coca-Cola.
Pretty much exactly the same, where we see a nice rising trend and then just breaks the trend line coming down over 2 days.
Yeah, and if we can see some weakness in the stock on Monday morning, I'll be looking to initiate some put debit spreads in this and also sell some calls. Because as you can see, it came up on Friday to retest that trend line to try and get back through it. And it didn't quite manage it. So it's actually still hovering underneath its trend line, which opens the door down to more downside.
Well, let's take a look at the volatility. Right, so we're just looking at 31% IV rank, and we're looking at a volatility of around 23%. So it's still pretty low.
Yeah.
We'd be looking to buy some put spreads.
I'd be wanting to buy some put debit spreads.
I'd
also be willing, depending what the risk to reward is on the calls, I'll be willing to buy. I'll probably be willing to sell the 12 days out calls.
Let's take a look.
So for the 34. So let's have a look at that. Let's sell. Let's just sell a one strike wide.
So 22 cents on a dollar wide strike.
So it's pretty much risking 4 to make 1. Let's go and confirm and send and just confirm that. So for me, that isn't good enough. Potentially, I could do it on the 44 days, depending on what the credit is there.
Let's take a look.
But 4 to 1 risk to reward ratio is what you're wanting to look at when you get into a 1 standard deviation now. This is a bit better. It's 2.5, 3 to 1. Still not good enough, I don't think, really. So it looks like I'll probably, I think it all depends on how the option prices and premium prices open up on Monday morning.
Are you looking at the 12 days for the debit spreads?
Yeah, I'll be looking for the 12 days on debit spread, yeah.
Yeah, cool. Let's take a look at...
So it's by the 34.
It's by the 34. Pretty cool. Right. So 1-1.
Yeah, one in the money, 1 out the money. That's very nice, and it's already at 33.08.
Yeah, great.
Obviously, I think the option prices are going to change, so these prices aren't 100% accurate because it's over the weekend. But if it's similar prices and similar premium on Monday, I'm definitely looking to take that trade.
Yeah, that's a really good trade, actually.
Probably the 34 also, and 32, and 34 and 31 as well.
Let's take a look at the 34, 32 as well. 73 cents on a $2 wide spread. So it's getting better.
Yeah, so that's also nice as well. So that's what I'll be looking to also initiate, and potentially a 31.
So we just have to look at price targets. 31 as well. Yeah, we could see 31. So let's take a look at 31. Buy. Vertical. 31. It's not as great.
No, it's still not as much credit actually. Looks okay. I'd still be willing to do it. I'd obviously be working out the way I structure this trade. Let's say if I have 10 options again, I'll be doing 5 at the 34, 33. Then we're having 3 at the 34, 32. And now we're having 2 at the 34, 31.
And this pretty much goes the same for Coca-Cola and
HPQ as well.
And HPQ as well.
Yeah, so HPQ I did the exact same setup of what I just did then. I split the trades down into that ratio.
So let's take a look at the last one. We're going to look at Under Armour, which had a big move on Friday.
Yep.
5%, 4%. Probably some news came out. I'm not really sure, but the stock's looking really good. It's been in kind of a sideways movement, so this could be a return to an upward trend, which would actually be really good. So on Monday, if there is any sort of pullback, it would be a good time to get into the stock.
Yeah, I mean, even it went up 4.87%. So even with a couple of days, half of first few days of the start of next week, we see some sort of pullback. We want to ideally come back to its 21 EMA, if not its 8 EMA. And then I'll be looking to pick up some core debit spreads there or sell some puts.
Yeah, let's take a look at volatility. Take this down to 10. Right, okay. So I mean, IB rank is extremely low right now.
So there's no point in selling puts at all.
Not at all.
So let's take a look at the 1 in the money, 1 out the money debit spread.
Yeah, right. So on a 40-day, right?
No, I'd be looking for a shorter time frame actually on this.
25 day, just so the premium isn't so high. Let's look at 25. So we're looking at 25 cents on a
1-to-1 risk reward.
Yeah, 1-1.
Yeah, I mean that's fine, but I'd definitely be the prices are going to change come Monday, and between now and when we want to get into this trade, because we're going to want it to have retraced some sort of at least 50% of its move.
Yeah,
but I think that gives you guys some idea of the premiums that we're looking for. I think it's quite obvious what we look for in a trade now when we're looking to pick up some debit spreads or put debit spreads. Is we're looking for that structure, we're looking for the safest play, and then we're willing to risk a little bit more with smaller contracts.
And it's the strategy is a little bit different right now because volatility is so low. Because we're looking at the majority of stocks here having what's Amazon right now? It must be Amazon's like in 2-3%. Under Armour's at 4%. It's difficult now. Amazon's at 4%. It's difficult right now to actually sell premium.
Yeah, I mean, it's not worth the while.
No.
I mean, there's not really any point in doing it. As you can see a minute ago when we looked at the at-the-money puts to sell, so the at-the-money calls to sell. We're risking 4 to 1. I mean, that's something that you should be receiving at a 1.5 standard deviation.
Yeah.
So it's definitely, it's nowhere near good enough.
No, but I mean, let's take a look at the VIX actually, and look how we're going forward. We have seen an increase in the VIX over the past few days, but it looks like it's starting to maybe come down again a bit.
It's come back down again. I mean, I'm always willing to pick up VIX at these levels because at some point it's going to have some parabolic move up to 24, 25, 26 again, and you're making a good return.
Yeah, and for all of this year, we've seen pretty much suppressed volatility.
Exactly. Yeah. And it's also a good hedge play if you think you're getting too long, you're collecting too many positive delta. Buy some VIX. Big institutions do this. They hedge a lot of their positions by buying VIX. I'd be willing to pick up more VIX calls here.
Let's finish with just some futures with oil. So with oil, we're still in this kind of flatlining. Even with the OPEC news that came out, where they said production is going to stay the same, we're still just seeing oil kind of in this kind of set. And this rise that we've seen also could have been short, covering shorts as well.
Exactly. I mean, you can see oil had a ridiculous down move really, really quick. Do I think it's going to go lower than 42? I have a hard time thinking it will. If we're looking at the price action at the moment, you said that like you said, Sam, it came up from the OPEC meeting, it rallied off the OPEC meeting. It's still sitting underneath the 8-period moving average and the 21-period moving average.
Yeah.
If we see some sort of close above that and see some buy step in the market, we could see the takeout of some highs, and that would actually open up the roof to 70.
Well, let's finish off with gold, right? Because this is one that is just seeing huge downward price movement over the past month.
Yeah.
We reached those highs of 1223.
Yeah.
And everyone was saying that gold was going higher, that this is the kind of the lift-off point for gold. But we've seen the price action get hurt pretty badly. Now we're approaching kind of three month lows almost.
Yeah, I mean, if I forget about the manipulation that goes on by the central banks and the governments and the gold price, longer term for a 10-year investment, gold would be my number one choice right now. But for day trading and short-term investing, I have a hard time trying to do anything with this because even if it rallied back up to its 21-period moving average, you have the opportunity to sell some calls or buy some put debit spreads. But I think the downside is really, really limited here. 1130 tops, you could play a play there, and I think there's a room for a trend line there.
Yeah, it is. So we still have another 20 points that gold can make before it reaches this trend line.
So a play that I'd potentially be looking at here, Sam, is gold coming down to test that trend line. I'd be willing to pick up some call debit spreads and sell some puts in that. Let's check out the IV in gold actually. Probably just not updating. Okay, no problem. If we go back to the chart.
So we're looking at 16% IV right now. It's quite low. So we could almost do a calendar spread here because look at the difference in volatility between the front month and the next back month. So the market's pricing in a lot more volatility, even between the front month, or sorry, the August futures on options on futures and the September options on futures.
Yeah, I mean it's a viable option without a doubt. I think what I want to see first is how it reacts coming down to that trend line support. If it breaks that trend line support, then we could be in a bit of trouble with gold.
So wait, you'd be looking to, if it came down a little bit further, maybe purchase some spreads, buy some debit spreads.
Yeah, I'd be looking to buy some call debit spreads.
Yeah, call debit spreads.
And probably sell some puts as well. I'm sure you can get some good enough premium for that.
Definitely. So let's take a look at what we're getting right now. So at the money, for $5 wide spread, for puts, it's $2.10 on $5.
Yeah.
And then also if we're going to be buying verticals, right, we're looking at, again, $2.10. So skew is pretty normal there.
Yeah, it's not too bad at all.
No. So it's looking pretty good right now. It'll be something to look into once the markets kind of figure out what it wants to do. So,
yeah, definitely. I think at the start of over Monday morning, probably the majority of Monday, I'm just going to keep my eyes on some of these stocks. I'm going to see how the general market's acting overall, and see if we can get in some of the plays that we've just gone over here. And I do like Mondays of a day to sit back and just watch how the markets come in after expiration, and see how it sets up for the week.
Great, cool. Well, we'll be back tomorrow. Wait,
Yep, tomorrow.
Tomorrow, yeah, we'll be back tomorrow with another show, going over how the market's opened and just really getting into the plays that we're looking for next week once we see some market movement on Monday.
Absolutely.
So thank you for listening to Traders Insight. I'm Samuel.
And I'm Matt.
We'll see you tomorrow. Bye.